I'm Charlotte McLeod with investingnews.com, and here today with me is Stefan Gleason, CEO of Money Metals. Thank you so much for being here. Great to have you back once again.
Yeah, Happy New Year, Charlotte. Thank you. Good to be here.
Yes, of course. Happy New Year. It's our first time talking in 2026, and it's been probably about 6 months since our last conversation. So we have so much to get into today. I thought we could start by just getting situated in terms of where we're at with gold and silver prices. I know last time we spoke, you mentioned we're still earlier in the cycle, and we've had some interesting price action. I'm sure we're still early, but we've had ups and downs in the metals prices. So can you help me break down where we're at right now?
Yeah, well, obviously, since we talked, a lot has happened, especially in silver. It just ramped up, really accelerating in December and January up to $120. Your viewers, of course, know that massive correction. We're still higher for the year, we're actually just slightly higher. But anyway, in silver, we're in the high 70s. It spiked down to 64, and the big question is that the low of this correction? And we don't really know, but right now it seems to be holding. There's another key level in the the low 70s. So we'll see. I mean, that was a huge run. There was a lot of acceleration with the call option situation that was developing, and it's sort of momentum. There was a lot of buying to cover calls, and it just ramped up. A lot of demand coming from China, a physical demand in India, and so forth. Really big moves in silver. But when you break above that massive 45-year high of $50, $54, kind of was the breakout point this time around, but it just accelerated, and you got to expect that there's going to be big moves, big volatility after that. And I'm still very, very bullish on silver and gold. Gold, of course, has been running for 3 years now, more than doubled. Very strong performance there. Came back, but not as much as silver. I think we're in a repair period, and I don't think we should expect higher prices in the near term. But I'm still very optimistic that we're going to see higher prices later this year, perhaps even by the summer. So we'll see. But the volatility is the big thing, and people need to be aware of that. Silver in particular. I mean, we saw the largest one-day drop, I believe, in history. It was like 28% back on January 31st. I looked back 2011. It was less of a drop, and it was over a longer period of time. So that was pretty scary for folks. But remember, I mean, it was lower than the level it came back to just 3 weeks earlier. So we have to take the good with the bad, and don't get too carried away with leverage and so forth.
Great summary of the situation there for gold and silver. And one of the reasons I was excited to have you on is to hear about what you saw from a dealer perspective when we had that big run up in gold and silver prices, and then the correction. So what trends were you seeing among people coming to you?
It's really interesting. So the last 3 years, really since the bank crisis in 2023, I believe it was, early 2023, the regional bank crisis, that was the last time it was really busy in the U.S. retail market until really the late fall. Now, gold, of course, has been moving way higher since that time, and that was driven by central bank buying and mostly demand outside of the U.S. In fact, we were seeing a substantial level of gold selling as people were taking advantage of the higher prices, and that was causing, the premiums to come down, the bids to come down. It was causing, there was less buying, there was more selling, so there was more equilibrium at the local dealer level. It was actually way more selling, and they were just choking on metal. People were selling back. That was on the gold side. Then silver finally started taking off, which, isn't uncommon. Silver's kind of the late bloomer in the bull market, doesn't start, until maybe the fourth inning. And it really started accelerating here in the summer and as we got into September and October. And that's really when we saw things flip in the retail market. It was the headlines around silver and the excitement around silver that caused a big new influx of retail interest in purchasing gold and silver, mostly silver, but also gold. But we were seeing much higher levels of sales on the top line, if you will, and new people coming in for the first time because they're seeing the headlines, they're excited about it, learning about it. And remember, it's a very small market to begin with, especially in the U.S. It's not a common thing for people to have gold and silver in their own, maybe they have some jewelry, but for the most part, people don't have it. It's not even a thing, even now. But we saw a nice new influx. Maybe we're, still at 1% to 2% of the public. That goes to 4 to 6 to 8. That's massive. There's no way that the retail market in the U.S. could handle that kind of volume. But basically, December August and January were just total pandemonium in the retail market in the U.S. in terms of demand. Hundreds or thousands of calls coming in every hour. I mean, just really intense. All of my competitors, Money Metals, is one of the top U.S. bullion dealers. There's 2 or 3 others of our size. We were clearly all under a lot of pressure. You notices on the website about delays and so forth. So what was interesting is we had not only the retail demand, but we still had the selling. We still had gold selling, and particularly then silver selling, people selling back, because now they're 50 instead of 50 or $40, they're now at 80, 90, 100, 110. 120, almost $120 there for one day. And so there was a lot of selling back. And so that caused really very active two-way market. So a lot of buying and a lot of selling, and just crushing volume to process for a business where you're dealing with physical metal. You have to examine it under cameras. You have to test it. When you're receiving metal, it's very labor intensive. And of course, shipping out thousands of orders a day. I mean, it's pretty intense. So very exciting time. It has slowed down a little bit in the last 2-3 weeks, a little bit. It's still at much higher levels than a few months ago. But I think that there's been a bit of an awakening in the retail market in the U.S. And I think it was what was happening in silver that really got everybody's attention.
Another good look at what's been going on over the past months. And I want to hone in on what's happening with the refiners. So I've been hearing that all this price activity in the silver market is creating delays and backups in the refiners. I'm wondering if you can weigh in on what's going on there, what's happening.
Yeah, well, it starts off with there being very low refining capacity in the U.S. Most of this, especially for silver, most of the refining capacity for silver is in China. More than 50% of all refining capacity is in China. And it's also I think the largest silver producer, or maybe second largest, but either way, there's even more of a concentration of refining in China and not here in the U.S. And so the refiners of silver have been super backlogged at least for a year, and that has only gotten worse to the extent that pretty much all of them are not accepting refining from customers, except maybe their long-standing customers or their largest customers. And so that has had and it's to some extent true with gold. It's a little bit less of a problem with gold, but even there, a couple of the big gold refiners in the U.S. started throttling acceptance of new refining. Or in the case of silver, they won't, they may not accept, say, scrap, but maybe they'll accept sterling silver and better, or it depends on the refinery. But what's ended up happening is you have, first of all, values have gone up. So the amount of metal, or I should say the value of the metal within the mechanism for any business, including refineries, especially refiners, because of the backlog, is way higher than it used to be, partly because of the volume, partly because of the price. And so if they're financing that or offering financing to their customers, then that starts outstripping their available bank financing. And it also puts a lot of pressure on their hedging practices. And there's costs of hedging. And then at the same time, there have been weird dislocations around hedging, which has caused at times hedging to be very expensive, way more expensive than the cost of interest. So it's just led to all of these dislocations and difficulties for refineries. Not that they're not doing well. I think they are doing well, but again, they're in shortage, but it's really had an effect on those that rely on those refineries for their business models, and that particularly has been the local dealers around the country, and especially the scrap collectors and comminglers, where they take this metal that people are selling, they combine it together, they ship it off to the refiner, and then when it arrives at the refinery, they expect to get their money out now, even though it may not be refined for weeks or at this point months. But the refinery can't provide them with that credit because they're running out of capacity because of, as I mentioned, all the metal in their system. And so that has basically caused bids to drop in the market. It's caused some scrap dealers to not be able to continue buying or functioning as a business because they don't have the capital. They can't get it from the refinery because they're not willing to pay until the end of the refining process instead of the beginning. And so it's really had this cascading effect across especially the smaller businesses and a lot of the local guys that aren't well capitalized in particular. And so it's an interesting situation. It also affects pricing. So the bids have come down. Right now, 90% junk silver, it's hard to get more than about, $10 below spot, or more than that, or even 15. And some people won't even accept it because it can't be refined. So unless it can be resold to someone else, and that's not a product that, say, the retail public, new people really like because they don't get it. So they like the pure silver, the 3/9 silver. So they're buying that stuff, but they're not necessarily buying the 90% silver coins, even though that's frankly one of the best, most cost-effective ways to get silver right now, particularly now. So anyway, it's caused these very interesting discounts and dislocations and spreads. I think that, as the market slows down and normalizes, if it does, then those spreads will narrow. And things might start functioning a little more normally, but we'll see. I mean, right now it's still very, very challenging for everyone, given the volume that's going on.
Yeah, you can really see those knock-on effects down the chain. And that's exactly what I was going to ask you is, how does this resolve? When does this resolve? And maybe an additional question is, have you seen something like this before?
No, I have not seen something like this before, particularly the two-way market, the massive volume on both sides. As I mentioned, there's certain products like 90% that people don't for some reason aren't buying, even though that's what we encourage them to because it's the best deal. But during COVID, it was very busy on the buy side. A lot of new people came in then. So that was an interesting time. But I think the price volatility combined with the volume on both sides is at levels I have not seen, certainly in our business. We've been in business for 16 years now. Also scenarios where, it starts making sense to take pallets of, say, 90% silver and send it to China or to Singapore or somewhere else, Dubai, to be refined, for example. I mean, there's never been that kind of situation, but at Money Metals, we're looking at that kind of thing and in the process of doing that kind of thing right now as we speak. And also the dislocations on 1,000-ounce bars that we've seen between London, New York, China, Dubai. There was a scenario in October where there was a massive spread where there was actually 1,000-ounce bars available in the U.S. well below spot because the Comex was trading below London spot. Huge premium in Dubai, India. People in India were pounding the table, desperately needing silver. Lease rates went through the roof, so the cost of financing, if you were short silver or you're leasing your inventory, was very high. I mean, it got to the point at one point in October, it was like 30 cents per ounce per day in leasing costs or financing or the cost of being short. So people that were short metal were screaming, and that was across the whole market. So there was a scenario there where we shipped several 100,000 ounces of silver to Dubai to be sold into the Indian market. And everybody, was, I could tell they were very urgently needing that metal at that time. And just very interesting dislocations that we've seen in the market. Tariffs is part of it. Physical demand, especially in Asia, is part of it. But it's been an exciting market.
I think exciting is definitely the right word. And talking about disconnects in the market, I wondered if you can go into what's going on in China a little bit more, because I was hearing for a while, maybe less so right now. You can tell me about the big premium for silver in China. You're mentioning that China is a big refiner of silver. So what are you seeing as China's role in this run in the silver price that we've been seeing?
Yeah. Well, one thing that I've noticed, I wouldn't say I'm an expert on that because we're not heavily involved in that market ourselves, but I have noticed, first of all, the last 2 to 3 months that Sunday night, when the silver market opens, almost every time silver goes higher. That the last couple of weeks has been maybe the only exceptions to that. That indicates a lot of the demand is coming from that part of the world, which is more of a physical oriented market, whereas the Comex in particular is very much a paper leveraged market. And so you can definitely feel this demand and sort of draw coming from Asia. As I mentioned, there's a lot of appetite for metal to be shipped over there for refining. And then it would almost certainly stay there, because why would anyone take the silver and ship it back and get paid less? Because there's a premium there. I don't know that the premium is as high as I've heard it, talked about on the internet, maybe $2, $3, $4 is more. But again, I don't think that I'm an expert on that because I'm not really heavily involved in that market. But there's definitely a premium there, and it varies. We're seeing different dislocations also. London right now is almost back down to the Comex spot price or current month price, but there have been times where there have been a dollar spread there as well. So there's definitely tightness in London, tightness in India, physical tightness in Asia, in China in general, and probably a little bit of a glut in the U.S. And that would be satisfied if the refining capacity was there. Then we could get more 3-9 silver out, and things would start moving a little more smoothly. But it's a dynamic market, and it's changing weekly. It's really interesting. You have to pay close attention. If you don't know what you're doing with hedging and transportation and just your flows of how you source metal, you can get into a lot of trouble or find yourself not having the metal you need. It's a very active situation.
It definitely is. And just, I think one more point on silver. Another point of concern that I've been noticing recently is about Comex inventories and the ability to meet people who are standing for delivery there. So I wonder, is that something you can weigh in on?
Well, okay. So, I mean, early this year, or I should say last year, there was that premium in New York versus London, and that caused the metal in the Comex to rise substantially. I think it was in the low 300,000 or 300 million range of ounces in silver, and then it went to over 500 million, and now it's dwindled to under 400 million. It's definitely coming down. The thing they're focusing on is the registered category, which recently dipped under 100 million. And I think that is worth watching carefully. I don't know that, there's an imminent, default or issue. I kind of doubt it. I know that there's definitely metal coming off the exchange because we are taking metal off the exchange, and it's a great place to source metal if you know how to do that. But it's hard to say. I mean, I think, virtually all the vast majority of contracts settle without physical delivery. There are more deliveries happening for sure, but there's still a lot of metal there. But I just don't think it's imminent. I think that there's definitely an ongoing drain, and I think a lot of it is moving out of the country where there's a higher premium. I mean, that's basically that's what economics will do. I mean, that's how it works. There's a higher premium over here. People are going to arbitrage that. They're going to look at the transportation cost. They're going to look at the time cost of money and figure out how much more of a premium do I need to get before I can capture that profit. And, $2 to $3 in China is enough. $1.50 in Dubai is enough to draw the metal out of the U.S. because the cost of transportation and financing is less than that. So if you know how to do it, you're going to do it. And a lot of players are, and that is causing a drain. But I hesitate to predict, the imminent collapse. That's been talked about for years. The system is currently working. It's definitely under pressure. It could happen quickly, though. And admittedly, it could.
Yeah, I think that's a very fair answer. So thank you for going into that one with me. And if we take a step back and look again at gold and silver a little bit more broadly. So you said in the conversation, you see prices going higher. Maybe we're in a holding pattern for a little while. Is there a particular factor or factors that you think could be the trigger for the next higher for gold and silver?
Well, I think the stock market will definitely be a trigger for gold. I don't know about silver, honestly. I think silver could get caught in the downdraft a little bit there. But, the situation otherwise is so strong for silver with the broad demand and also the supply situation that I think it will do better in a stock market downdraft than it normally does. But I think gold is going to respond really well to any kind of problem in the stock market. The de-dollarization trend that we have going on is ongoing. I mean, gold is now the number one reserve asset of central banks. It was only a few years ago that it surpassed the euro. Now it's surpassing the dollar. And that's a trend that is going to continue. The de-globalization also plays into that. If people are doing less trade with the United States, they have less reason to hold dollars. So, I'm looking for any number of things. I think I would not be wanting to be short gold or short silver in this environment for sure.
Yeah, absolutely. I think that's a fair point to make. maybe we talk a little bit about the Federal Reserve. Usually I check in with you on what's happening there. And it's kind of an interesting situation because we're approaching the end of Powell's term. We have a new Fed chair coming in. I know there was some debate about whether he was going to fall in line with Trump's desire for lower interest rates. Any thoughts from you on what we could see coming from the Fed in 2026?
I mean, all of this talk of a tight Fed it's always sounds so ridiculous. I don't know why the Fed is by design intended to be an inflationary creating machine. I mean, it's an inflation creating machine. That is the system. It's the only thing they can do. There's way too much debt. Warsh may be good at running he has a knowledge of all the mechanics and he was involved in the QE stuff and so forth. But him being hawkish, I mean, I think that's way overblown. What's interesting, I met him a few years ago and I asked him a question. I met him at a private reception and then at the Comex gold dinner, I publicly asked him in front of 1,000 people. I asked him, Mr. Warsh, is the United States government involved in the gold market? And if it is, what are the purposes of those transactions? And he basically danced around it. His basic answer was, well, it's less than you would think. Which was, to me, that's a yes, it is involved. But then he sort of minimized it saying, but, it's important the dollar is strong and we need to make sure that the IMF has a role and that there are times that we need to get involved in stabilizing the currency markets. So this is a guy who knows what's been done behind the scenes. He's been a little more honest about it than other people in the banking world, central banking world. So I'm curious what happens at the hearings and whether he will be asked questions of that nature and how he'll answer them. But again, on the issue of interest rates, I mean, Trump wants lower interest rates. He nominated Warsh. Warsh is going to give him lower interest rates. The idea of a hawkish Fed is a fiction. There's no such thing.
To me, that makes sense as well. And really interesting to hear that you've actually spoken to him. I don't think I've talked to anybody else who has. And I think this also gives us a good segue. Usually we spend some time talking about sound money policies in the US. And you mentioned before we turned the camera on that there are some state level developments that are concerning to you. So I wanted to open up the floor and ask you your thoughts on that.
Yeah, so over the last 10, 14, 13 years or so, Money Metals has been heavily involved in promoting sound money policy. There's a project we support called the Sound Money Defense League. I think you've had JP on here before. 10 years ago, there wasn't much appetite for these issues. People didn't understand it. There wasn't much interest. We had very few bills. And that has slowly accumulated, and now it's turned into a lot of momentum for sound money and gold-related, silver-related policy at the state level. And some of the biggest things that we've encouraged is removal of taxes, which are sort of the primary impediment to remonetizing gold and silver, i.e. the taxes when you buy and the taxes when you sell, the friction. These are very meaningful, impactful, impediments really to gold and silver ownership. And states have been removing these taxes at especially the sales tax, almost completely gone. There's only 5 states left now. When we started, there were 20 that had sales tax. Income tax is the next area. There's about 14 states that have removed income tax from the sale of gold and silver in the U.S. States are now talking about gold reserves. We got Utah, Wyoming, Ohio, and even Texas owns gold. Texas pension fund, public pension funds own gold as an asset in their portfolio. So there's many other bills on this. So there's all this appetite, and most of these bills are unopposed, or it's usually a lack of understanding is why they don't pass. There's not like a constituency that's anti-gold going in there and opposing. But anyway, the point is we've been having all this success. And there's more interest, and it's not just our efforts, but of course the circumstances. Inflation has been out of control, government intervention, the economy during COVID and so forth. Big issues brought people to this issue, and people are kind of realizing what's happening, and they want to do something. At the same time, some opportunists have come in with proposals to basically try to get their product launched by a state as a way of getting new customers. And we've seen new ideas come in that are actually quite bad, that are fascist, if you will. They're basically business government partnerships, rolling out co-launching products. And not that this has really actually occurred yet, but there's a whole bunch of bills being promoted by a couple vendors, basically, that want a special deal with the state of Georgia or the state of Utah, which they just rejected it yesterday, fortunately. But what these do is basically put the government, there's proposals to put the government in the middle of holding people's gold, selling them gold, and even allowing them or giving them access to a government-run or managed payment system. So instead of all of these services that are already available and competitive in the private sector, depositories, dealers, payment apps, and so forth, people are asking governments to partner with these particular businesses as a way of getting their business to get kind of more customers. So we're seeing this. We're very alarmed by it. It's picking winners and losers. It's kind of a boondoggle. It puts the government in the middle of people's assets, which custodian of their assets. People don't want the government involved in their gold. That it's a completely non-starter idea from that standpoint. But it's being pushed, and we're having to respond. And so I put that out there as, just because it's a gold bill does not mean it's good. More government running the gold industry or basically taking over the gold industry or competing with private businesses from the standpoint of the government and the taxpayers subsidizing that, it's not a good idea, and we're out there trying to stop it. So just putting that out there, just because it's a gold bill doesn't mean it's good. And we're blessed, I guess, that there is so much interest. So people knee jerk like, oh, gold bill, good. And it's like, well, big government, bad. Like, there's good ways to do things and there's bad ways. So that's one of the big challenges that we're dealing with this year.
I think the way you explain it certainly will make a lot of sense to people who like gold for the reasons that you've laid out. So you talked a little bit about the work that you asked. What sound money initiatives are you excited for or pushing forward in the coming year?
Well, okay. On the state level, removing the last few sales tax laws involving gold and silver, we have Maryland, Vermont, and Washington right now, where we're trying to get that done. There's still taxes in New Mexico and Maine. I don't think we have a bill in Maine this year, but we may have one in New Mexico. So there's 5 states. We're trying to defend Virginia. It looks like we could lose that. It's being sunsetted, so we're working on that. Income tax, we have bills in Oklahoma, Iowa, I believe Mississippi. It was just done in Idaho. Gold reserves, Idaho. There's one in West Virginia. So there's a few of those types of bills that we're working on. Removing dealer regulation. There's a couple bills that lessen the burdens on local dealers that we're pursuing. At the federal level, we have the audit the gold bill. Senator Lee and Thomas Massey and several other members of the House have both introduced bills in each chamber. What's interesting about that bill is it's not just about auditing the gold, but it's looking at whether the government has encumbered the gold. Have they pledged it? Have they leased it? Have they swapped it? Has it been mobilized into a transaction with the IMF? And all of this would have to be audited and disclosed. Another thing that's interesting, and people don't know this, Charlotte, that virtually 70%, maybe 70 to 75% of the U.S. gold reserves, which we think we know how many ounces there are, and we have a list of supposedly what form it's in, but about 70% of it is not pure and basically unacceptable in the global market. It's 90% pure gold, and that's because it's from these coins that were melted down in the 1930s into what they call coin melt bars, and they're just not acceptable. It would take years of refining to make this gold something that you could actually freely sell and transact. I mentioned the problem with the refineries. Right now, you can't get you can't get very much gold. If you wanted to use it in the market, you'd have to get it into 4/9 pure form, and it would take, as I mentioned, years or certainly months to refine into the U.S. gold into a proper form that it could actually be used, in the market and accepted. Not that we want the government to do that, but if it should at least be there and be in that form. So the bill, Senator Lee's bill, would refine the U.S. gold reserves into 4/9 pure gold, and that would be a multi-year project. There's also a bill about to be introduced in the Senate called the Silver Act. And that is another thing we're working on. And that Silver stands for, in this case, it's an acronym, and it stands for System Integrity Through Licensed Vault Expansion and Resilience, Silver. And so basically what that will do is prompt the exchange to admit other depositories outside of the New York area. Most people don't realize, but all of the gold and silver backing the U.S. markets are concentrated, all of the holdings behind these contracts are concentrated in depositories that are in the New York area within a 150-mile radius. And so not only is that basically excluding 90% of the country geographically, but there's significant banks and efforts, manufacturing, production, and so forth all over the country, but all of the gold and silver is concentrated right around New York. That leads to systemic risk potential for, black swans, a weather event, a terrorist event. It also involves, restraint of trade. If you've got just a small group of depositories and banks that control the entire physical market for delivery around the exchanges, the U.S., basically the global silver market, or this is the U.S. part of the global silver market and gold market, and it's all in one little area, excluding the rest of the country. That's excluding access. It reduces competitiveness, pricing, and so forth. So this is a bill that basically would prompt greater consideration of other locations, because there's lots of gold and silver in Texas. There's a lot of gold and silver in Idaho. There's the depository in Las Vegas. There's another one in Nevada. There are many places. There's one in North Dakota, and none of these are part of the global market or the exchange. And that is something that hopefully will change if this passes. So we're working on a number of things, but in my case, I'm focused mostly on my money metals business and the depository, the lending program, and first and foremost, we're a dealer. We're mostly a retailer.
Well, all of that is really fascinating. So thank you for going into it. And especially the audit. We still get questions in the YouTube comments, people wondering what happened to that. So
down the memory hole. Yeah, it was what was interesting when they were talking about it back then, Trump and Musk was like, we need to do a live walkthrough. Wouldn't that be cool? It's like, this is a frivolous way to think about this massive and important strategic asset of the United States, and real custodians like Money Metals Depository or other depositories in the private sector. They do audits every year. They do audits every month. There are disclosures. Everything is under controls, dual controls, total, both independent, external, internal. It's just part of what you do. The federal government is failing, and the lack of transparency and accountability there, and not having valid audits, true audits, robust, repetitive audits. It's not, even if you did it 40 years ago, even if it was done properly, that's not the end of it. It's an ongoing process. So it's really a shame, and it's a bad example that's being set by the federal government. Hopefully there are no real issues there. We have done some research. There's definitely been some compartments opened, seals reaffixed after bars were moved, things were done without re-audits, and that is an auditing no-no. There's no question that there were compartments opened and resealed without new audits. And our depository, anytime anything is open, it's re-audited. You have to. And so at the very least, there's some irregularities, and hopefully not worse, but we won't know till there's an audit.
Well, let's hope we see some momentum in that direction. I'll let you go. This has been a really great overview of what's happening in silver and gold, unless you had any final thoughts that you would leave people with.
Well, I'd say buckle up. I think we're in an exciting time for the gold and silver market. That $50 level in silver being breached after 45 years. I know you've had Michael Oliver on. I kind of subscribe to his line of thinking that we could be moving into a new reality for silver. And I don't think we're going to go, it's not going to be a straight line, but I think these assets are getting attention. The rest of the world seems to be in on it already to understand what's happening. It's the West, and particularly the US, that seems to be a little bit behind, but I think that's going to change. And I'm excited for that realization that we see coming.
It does seem like that day is approaching. Thank you so much for coming on. This was great.
Thank you.
Of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Stefan Gleason with Money Metals.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.